So if you want to see the value of a stock or have me run my DCF, you'll recommend a ticker. Actually, I'm gonna try to keep track of this sheet. Maybe every time I do a live stream, today's 8/11. I'm gonna keep track of like the results, and then we can always go back to the spreadsheet and see if I got close to the prediction. So just throw out a ticker, any ticker you want. And then over time, maybe a year from now, I could look on this spreadsheet and say, oh, we did that ticker back in August 2024, and look where it's trading right now. It kind of helps because running the DCF over and over, you get to learn a lot about the nuances of it. But when you look back at what you predicted, that does give you information, because then you could adjust the model potentially. Because you could say, well, it was a little too harsh. Maybe I shouldn't have done that. The WACC was too high, whatever it might be. So prediction. Thank you, JB Well. Always so generous. Appreciate that. Unless you donate money like JB Well did, then I could maybe spend a little more time on the ticker and talk more about the company. But but these are supposed to be, really quick DCF runs. I don't know what I'm doing. Actual price. Let me just set this up. Calculated price, result. So I don't have to do this each time. Okay. How's everybody doing? I'm trying something new. I don't know if you guys noticed, but I'm going to try to do short videos, 4 to 6 minute videos, and pump out like 1 or 2 a day. I don't know. Nothing seems to work, but I'm trying different things. And who knows? So Mo is a great company. I like Mo a lot. Where am I? Okay, I got my setup. Okay. So we enter the price. Next, you need to enter the market cap, 86 billion. And then you have to enter the future 3M. Then the future free cash flows. So the price, the current trading price and the market cap, that's pretty, that's given to us. So there's no prediction there. The only thing we can maybe change is what are the future free cash flows. So we could get analyst estimates and then we can massage them. I have my own way of doing things, 7.8, 8.2, 8.2. That's real close. That's interesting. I like that result. I'm going to change the color so I know it's already complete. Once it's in blue, it's locked in the spreadsheet forever. This is formula driven based off of the this model. So look at that. So Mo, see how quick that is? Mo is trading at $50.43. Let me put the name. Obviously, we know what Mo is, but if there's a ticker, and I'm looking at this sheet, say a few months from now, I might not remember what company that is. So this will help. 3M also pretty well-known company. 3M makes those Post-it notes. See how it's just that easy. 124.68. So that's the stock price. Adjust the terminal value and whack, and I might do that on certain companies, but sometimes I adjust the future free cash flows as well based on my feelings and my opinion, because it's an art, not a science. Valuation 3.9, 3.7, 4. So I try to just put in get the basic information in there, and then I might change it based off of my opinion on things. I gotta get 10 whack, maybe a little high for 3M. So 3M, see how close it is to the real value? That gives you a little more confidence that maybe, is there a way to know the historical discount to value the company trades at without backtesting everything? Like Mo has 17% discount, but if that's historical, I see what you're saying, JBL. So you want to be able to go back and say, like, in January of 2024, what was the result of Mo? Is that what you mean? Or like in 2023, what was Mo's valuation? You want to see like maybe the past few years, what was the valuation? Because if it was like, is that what you mean though? I just want to make sure. Like if you like by back testing, you can say, oh, in 2022, Mo was valued at 150. 2023, they're valued at 120. 2024, they're valued at 170. I don't know. If it always trades at a discount, you see it. It depends where you look, though. That's the hard part, because my DCF is different than the next person's DCF. So I guess if you were looking at one particular source, you might be able to get that historical, but there's no value. Like the fact that I'm saying Mo is a 17% discount because I'm calculating that it should be 61. That's just my opinion of it. There's nobody else is going to have this exact opinion. So there's really no historical, I guess, unless you found like a website that calculates a DCF. If you use their exact formula, but I don't even know like anybody who keeps that information. The historical, like I might have it because I have all these videos up, so there's proof of what my value is. But to get like a database or I don't think there's anything out there that I'm aware of that keeps track of this stuff. Because if you look at like if you were to look at like, you say, okay, in 2023, what was Mo's value? You might find like 10 analysts, and they're all over the place. One says, Mo is worth $70 a share. The other one says 180 a share, and another one says 110. So there's like no like, because someone will be right anytime you you look back or look at analysts, there will be some people that are spot on that were right, and there will be some people that are just way off. So I guess the only way to like answer your question is you have to just pick an analyst and just use whatever their opinion is. But the thing is, I don't know anybody who keeps track of like all the historical values. Because the way it is like you know those people in Vegas? There's these people they're like bookkeepers or what do they call it? They're do you invest in muskrats? There are these guys in Vegas, or maybe girls, and what they do is the handicappers. But what they do is if you're a gambler, right? Let's say Giants versus 49ers. Say you're a gambler, you gamble on sports games, on football. So these guys in Vegas, they say they're experts. They're like, and what they do is they'll call you up and they'll give you the result, the winner of the game. So they'll say, okay, I know you don't know me, but I'm going to give you this one game to just prove I know what I'm talking about. And then that should help you realize what I know what I'm talking about. And if I win, then great. Hopefully you put money on the game and you win money and you use me in the future. Because these people want to make money. So they'll charge you like $500 a pick every time. So say Giants are playing the 49ers, right? And it doesn't matter what the point spread is, because generally there's going to be a winner and loser. But I don't want to get into point spreads. So what they do is Giants or 49ers, they call 100 people, right? And they tell 50 people, listen, put money on the Giants, or I just want to prove I know what I'm talking about. So they get 50 people they're gonna call up and say Giants are gonna win. That's my pick. And then 50 people they're gonna say 49ers are gonna win. Right? And they're calling people who are gamblers. So they're going to be right 50 times. So the people, when that guy calls, say the Giants win and they cover the spread. So the bookie in Vegas calls back to 50 people. He's told the Giants are going to win. He doesn't want to call back the people he told the 49ers, because he knows he lost. So he calls back those 50 people and he says, look, you see, I know what I'm talking about. Now I want you to lay money on the next game, and I'm going to give you the winner. You just got to give me $200 or whatever it is. So these 50 people might say, well, you got lucky. How do I know you can win consistently? So what the Vegas bookie does, he has 50 people who he already predicted the right game. And then say the following week, Giants are playing the Chiefs. So he has 50 people who are kind of interested in learning his, getting his picks. And they like, okay, you got the first game right. What about Giants versus Chiefs? Who's going to win that game? So the Vegas bookie, he tells 25 people Giants, 25 Chiefs. And say that Giants cover again. So he's not going to call back the people he said the Chiefs for, because he lost. The 25 people he told the Giants are going to win, they're hooked. They're like, okay, you're the real deal. You picked 2 correct games in a row, and you might have gambled. You might have put money on one of these 2 games. And if you did, say you put like a few $100s on these two games, you already won some money. So you're willing to now pay this guy. And if you think about it, like you can have like 5-6 winners in a row with somebody, because if you keep splitting, so that's kind of like my theory on these analysts. There's going to be a bunch of people who are going to hit it and a bunch of people are going to miss it, but it's usually pure luck. I was going to say something else about the bookie thing. So yeah, so if the bookie gets like multiple right in a row, then the person's hooked. Especially if they get like 4 or 5 in a row correct, then the gambler's hooked and he's willing to pay that bookie a lot of money to get his picks. And the bookie didn't do anything special; he just randomized it. And this is how bookies make money. Say the Super Bowl has 2 teams, which would never happen, but say Jets versus Giants in the Super Bowl. The bookie is guaranteed to make money. The reason I guarantee to make money is, say $1 million is put on Jets. You know, his customers call him, and $1 million laid down on the Jets, and 1.5 million is laid down on the Giants. So you might think the bookie might lose money, because what if the Jets cover, or the Giants? What if the Giants cover? Then the bookie has to pay 1.5 million to the winners, and he only collects $1 million from the losers. But the thing is, with sports betting, there's a thing called the VIG, the vigorish. So if you lose your bet, you have to pay 10%. So if you bet $100 with a bookie and you win, the bookie gives you 100. But if you lose, you have to pay 110. It's called the VIG. It's like a premium. So the reason the bookie never loses money is because if this scenario happens, his customers put $1 million on the Jets, $1 million on the Giants. He takes that $500,000 and he puts it on the Jets with another bookie. So no matter what, he's gonna break even. He has the same money laid on the Jets as the Giants, so it's a guaranteed break even. But he gets a 10% VIG, so he makes $100K automatically. Is anybody following? This is how people launder money, actually. When people steal money from whoever, like if somebody stole $200,000 from I don't know, like some of their clients, what they do to clean the money is that they lay 100,000 on the Jets, 100,000 on the Giants, and they just want to win one. So they have a trail of reason, because if the bank says, "How did you get all this money?" you would just say, "Well, I got lucky in Vegas. I could show you, prove it to you." That's how you kind of clean the money, which I think is pretty interesting. But I don't know if you guys are into it. Just throw out some more tickers. Art. There's a lot of laundering in art. Yeah, the weighing machine blade. That's what Warren Buffett says, right? That's his analogy. If you always calculate a stock at a discount, then your calculation is missing something. Yeah, that's why I think I make money, because I hold it long term. I mean, the short term, there's no way I can figure it out. But in the long term, you should make money. unless you invest in individual stocks, risky individual stocks. But if you invest in like a broad range of stocks or even an index, you should make money. You should move with the market, at least. BRK. I've been telling you guys for a couple of years, BRK is great because I have so much cash. And you can watch one of my older BRK videos. They have a ton of cash. And when there's a downturn, they can pick up companies for cheap. 432, 930. They're getting close to $1 trillion market cap. Because say your neighbor, the homes in your neighborhood are 400K. You know, that's the average price. Everybody in your block's home is worth pretty much 400K. Say your neighbor is really having financial problems, right? And they need to sell their home. They need to sell it within a month, for instance. So the only way they can sell it within a month is for a cash buyer. They can't risk someone getting a mortgage and spending all that time. So if you have the cash and they're in an emergency situation, they'll probably give you an amazing deal. They'll be like, I'll do 300K all cash because I can't risk not selling it within a month because then I'll lose my house. And if you have the cash on hand, you get a great deal. You could flip it right away. And even after fees and stuff, you're probably still going to make 60, 70K. That's the beauty of having cash. You can pick up really good deals at discounts. Berkshire Hathaway. You know, that's named after Anne Hathaway, the actress. Her father, BRK, UBS, HZNFF. And if you do donate, I do appreciate that, but we can talk more about it. I could spend more time. We can actually open up their 10K or 10Q if you want to. And so thank you, Barbacoa. Okay. They got rid of their Apple. And I mean, I own Apple directly and I own Apple through, indexes. So I hope Apple doesn't go down, but if it does go down, that was a great sell. And even Warren said he thinks interest rates, there's a good chance interest rates will go up a lot. I mean, taxes will go up a lot. And he's like, we have to pay 21% of taxes on the gains from the sale of Apple because we made a lot of money. And he says if taxes go up to like, at one point, I think it was maybe in the 80s, if you had a huge gain, like several $1 million gain on something, you could pay up to 50% of taxes. There was a tax that was 90%. I can't remember how you come into that situation, but there was a 90% tax. Because if we keep going into more and more of a deficit, the only way for the government to get money is taxes. That's the only way. That's how they get money. That's their revenue. Like Apple's revenue is selling phones. The government's revenue is taxing us. How come it doesn't have any forecast? See, if it doesn't have a forecast, then you can just do I'm giving them a low whack because insurance companies, the reason Buffett loves insurance companies is the float. They sit on so much cash. he has cash because he sold stock and he is doing well as a business owner. But he has actual cash. Like insurance companies hold so much cash for their clients because people pay for insurance up front. I mean, car insurance, all insurance is different. But if you have life insurance, people are paying like 50 years up front. Like they're people in their 20s, 30s, and 40s are getting life insurance, and if they ever claim on that life insurance, it could be like decades ahead of time if they ever do. So life insurance companies sit on a boatload of cash for such a long time. They have to invest it somewhere. So Buffett invests it. And I'm doing these pretty fast. So, I mean, if I was doing a video, I might slow down and read through it and try to pick things apart. But this should give whether I do it real fast or spend an hour, I'll probably get a similar result. Usually I don't change the assumptions too much unless I have a big hunch on something. Horatio Hathaway who sold the fact Buffett is related to Anna Hathaway. Now, I'm just joking, Cyan, Ken. That's not true. I was just joking around. How could Anne Hathaway have a connection to Berkshire? Ulta. Oh, yeah, Ulta's a good one. Ulta Beauty. Ulta Beauty is not the best during high inflationary environments. Companies like Ulta will make a lot of money when people have a lot of residual income left over, like during when things are going really well, when people are making money. Now people are just getting squeezed left and right because things are just so freaking expensive. Everything's just so overpriced. I did think that at first. Yeah, you can't tell if I'm being sarcastic. I kind of have the same tone. So you're not alone in not being able to tell if I was serious or not. 29.92. Union Bank of Switzerland. They're the biggest bank in Switzerland. This is a good high level to, and also for the DCF, you could build in, you could build into the model the yield, the dividend yield, because when you receive a dividend, you have, I mean, it's pretty absolute, like the DCF. It's just calculating future free cash flows, discounting it back to the hell. But you can make it nuanced, the model, and yeah, I've done a lot of different things with the model, and there's a lot of like because if you come up with the right formula, there's no one formula is the right formula. If you come up with the right formula, it could give you a better result when you do this stuff in the future. Okay. I'm just getting this set up. It's a one-time thing setting this up. Okay, I think I got it. Dry sense of humor. Yeah, I love the dry sense of humor. Where was I? Oh, UBS. It's definitely tricky. Banks, insurance companies. We'll still do the DCF, but I probably wouldn't use it for. This is the second one. There's no forecast. So odd. I don't think I could. I'm having a barbecue next weekend if you guys want to join. No, I'm not replacing it. I did UPS. I'm saying the result. I mean, I'd feel more like if I came up with a DCF for Altria saying it was undervalued, I would feel more confident in that result than UBS. Just because of how different a bank is, just how different the way they do things. Like I tell people, even I don't think it's the most important thing in the world, the DCF. I do it, but I would say 10% of my decision making is based off the DCF. It's not like it's not the if the DCF says buy, I will buy, and if it says sell, I will sell. I do the opposite a lot. So DCF is only 10% of my decision making, but a lot more is how I feel about the company and their products and their future and their scalability. That's probably half of my decision about a company is, are they scalable? And, do I like the product? Do I have confidence in the product? I'll be right back. Okay. I think this is a good idea because it gives us more visibility into the DCF and a good tracking tool. Okay. This is a penny stock, I guess. It sounds like a penny stock, HCNF. And if I'll try to do everything that people suggested, but if I miss it, you might have to donate money. If you donate money, I'm guaranteed to do it. 14 cents, 227 million. And this is another situation where the DCF is probably not the best result because they probably have negative free cash flow. We can do it, but there's a lot more to look at. because it's like if you bought a bond, the DCF is like will be perfectly value a bond. That's the purpose of that's the best way to value something, using a bond, a guaranteed fixed interest rate. But with the stock, I didn't expect them to have positive free cash flow. I'm really shocked. Huh. That's amazing. Look at this. It gives me a good value also. I'm surprised it gives me such a good value. I was expecting to give me like something that didn't make sense. Let's all jump in Horizon Oil, because this looks like we can make a ton of money. I'm coming out with 23 cents. It says 14 cents. Uber. Oh no, that's not going to work. Okay. Where was I? Because with the DCF, like, one day you come up with this value, the next day it's a totally different value, and use the same information. So it almost doesn't seem like it makes sense. That's why people always like say, "Oh, analysts don't know what they're talking about." Like they all had Nvidia valued at $300 billion, and then when it went up to $300 billion, they raised it to $400 billion, then they raised it to $1 trillion. But we just use the information we have. There's no way for us to just barbecue. Bring business questions. I like that. Yeah, if anybody wants to, come to the barbecue if you live in Northern California. RDW. No, you could pick with negative free cash flow. No, I mean, I've done this a long time, so it doesn't matter if it has negative free cash flow. I'd rather value a stock with negative free cash flow than value a bank, because at least a stock with negative free cash flow, we're using the correct model. I'll show you how I do it. 539, 353. Yeah, I came up with a way to do a DCF with negative. I'll show you how I do it. I'm not going to. Oh, they do have positive free cash. Right? Positive 8 million. There you go. It's not even negative. Even if it was negative, I was going to use my different approach. I have an alternative to look at that. Even with a modest growth, but this could be helpful, because in a few months from now, we could be looking at the spreadsheet and I say, wow, I was so on target with this stock, or I was so off with this stock. And I know the approach I used, so then I could kind of like alter it maybe. And then I could maybe certain stocks should be valued this way and other stocks should be valued that way. And then you kind of learn as you go. Just like, playing a sport or instrument, you adapt. What about PFE, Pfizer? And you could say it again in the comments, the ticker, because I'm going to miss some because there's a lot. CEG, that's Constellation Energy Group. Pfizer pays 42 cents dividend. Okay, it's good to know. 3.5, 3.5. I'm right there with Constellation. It looks like they're trading at the appropriate level. Because most stocks are trading at intrinsic value because the market is perfectly efficient. So all information is priced into every single stock at all times. So mathematically, you can never make money in a stock market in the short term because all information is priced into it. The only way you can make money in the stock market is on a long-term basis by trying to predict how a company's going to do in the future. So don't ever try to beat stock market because it's impossible. And the only time you can beat the stock market is if you get lucky. And you could get lucky multiple times. But in the long term, you can't. You just have to pick good stocks. Because you're going to get lucky sometimes. You're going to get unlucky sometimes. And it's fun, I guess, but it's kind of like playing the lotto. Just because you won the lotto doesn't mean you're good at picking numbers and predicting the lotto number. You just got lucky. Cheniere Energy. Sharice Suki's brainchild. LNG. Did somebody pick LNG? How did I get LNG? Oh, somebody did pick it. Okay. LNG, liquefied natural gas. This is why we're not so dependent on the Middle East for oil, is because of these alternative ways to get oil and natural gas through fracking and LNG and what's it? Natural liquid gas. Is it LNG, liquefied natural gas? I can't remember. I Okay, I'm at 207. LNG also just signed a long-term supply deal. Oh, they did? Shirisuke got kicked out of LNG, out of Cheniere Energy. Didn't he get kicked out by the who's that activist hedge fund guy who always tries to what's his name? Carl Icahn. So he got ousted by Carl Icahn. In 2016, Shirisuke was ousted after a dispute with Carl Icahn. So if you have enough power, own enough shares in a company, you can get rid of the CEO or the founder. Because the CEO of a company is an employee of the company. They don't own the company. You own a company, the shareholder, the stockholders. Of course, you own such a small amount of the company, you can't really make any decisions. But Carl Icahn, he usually owns a lot of a company, like Buffett does. So he can make decisions or not, maybe not solely on his own. He could talk to other big shareholders, and together they might have over 50% potentially. So then it's a no-brainer. Then they have to listen. But even if they don't have 50%, they have, say, 30% of the company, he can still have a lot of say. Atcore. So this is why I like doing this. I can learn about stocks I haven't seen before. Atcore. Yeah, Carl Icahn, Blade. Good call. I got to remember a way to remember his name because I forget it sometimes. Carl Icahn, CI. What's a good Carl? How do I remember the name Carl? Is there like can you think of like a sentence using his letters? Cash. This is Carl Icahn. It stands for cash always rules. Something like that. Cash and respect. I don't know. What's a good sentence so I can memorize his name and I don't forget it next time? Atcore 95 3.4. Just remember, icon equals activist. Oh, icon. That's a pretty good way to remember it, right? Icon, Carl Icahn, activist. Okay. So they paid a 1.35% dividend. At core. Let me turn the AC on. Cash always rules life. That's perfect. That's what I'm looking for. Cash always rules life. So now I'll never forget his name, Carl. I just started watching Shameless. I'm in the middle, like season 5. It's a really good show. There's one of the characters is Carl. Cash always rules life. Okay. Here, let's add core. So I'm doing the videos are like 4 to 6 minutes, so I could do a lot more tickers. I've already done 2, 4. I did 11 videos today because it takes me 15 minutes to do a video. I didn't edit though. That takes another like 20 minutes to edit each video. So I'm just setting it up, and then during the week when I have time, I'll edit. So I'm just picking industry. So I did the food distribution industry and the auto parts industry. Gentherm, Garrett Motion, XPEL, Cisco. That's a bigger one. The food company Cisco, not CISCO. U.S. Foods. So yeah, food distribution industry and the auto parts industry. Atcore. I feel like I did that ticker once. No, that's Amcor though, not Atcore. He does, right? The actor in Shameless. He's not a likable character. Carl. I don't know. He kind of like. I don't think he's a good actor either. I mean, he's better than me, but I don't think he's. I don't know how to explain it. So I'm at 115. So every stock is trades at intrinsic value at all times. Because like I said before, the market is perfectly efficient. So if a stock is trading at 100, right, and say its intrinsic value is 110, then people will buy the stock. The difference between 100 and 110, that's arbitrage. That $10 arbitrage is like free money. Whoever wants to get it. So the stock price is $100, but it should be 110. So there'll be people will buy the stock. Enough people will buy the stock to push the price up to 110, and then it'll stay there. You like Frank? Oh yeah. Well, what? William H. Macy's a really good actor. Like, he's like one of the better actors out there. So I think I like Lip. I think that's my favorite character. The reason I started watching Shameless, I knew about it, but I just never like watched it. Is because I'm watching with Jeremy Allen White, who's Lip. I'm watching that show when he's a chef. He's a professional chef, and he opens a restaurant. So I'm watching that show, my wife, and then I was looking, like reading about him, and then I saw he was in Shameless, so I started watching Shameless because of him. Yeah, I looked at Icon Enterprises. I'm not sure. I can't remember. For some reason, I felt like it wasn't a good investment, but I can't remember why. Adcore. It manufactures electrical conduit and fittings, cable and cable management system, infrastructure, safety. Okay. Ulta Beauty. The girl on Shameless, Debbie, she's a regular on the Connors. I don't watch the Connors, but I read that on Wikipedia. Ulta. The Bear. Yeah, the Bear. That's I was watching the Bear. That's how I found out about Shameless. Well, I knew about Shameless. It motivated me, I guess, to watch Shameless. Ulta Beauty. A short seller caught Icon Enterprises doing shady stuff. All right. I think I read that. I think that's why. Yeah, Debbie's annoying, right? So Ulta, I'm at 341. Fuck. Oh, Ulta. So it was over 500 just in the beginning of the year. Well, it's really taking a nosedive. It's down like 40%. OC. Owens Corning. OC. Oh. So Owens Corning. 1.1. So every stock should trade at intrinsic value, and if it doesn't, there would be a lot of buying to close the gap. Uber. 69,144. Wow, 144 billion for a company that doesn't make any money. And probably will never make money. Oh, they do have positive free cash. I didn't realize it was positive. 5.6. It's supposed to grow a lot in the future. That's how it did. Stock price was forced up so much because they just started generating positive free cash flow just at the beginning of this last year. And it wasn't really anything. It was pretty much a break even until like mid 2023. They weren't really make anything. So the point is, if you want to make a lot of money in the stock market, you can't wait for them to make money. You have to buy it when they're losing money before the stock gets driven up to like $140 billion. Because you could start a company and do better than Uber. You can, instead of losing money year after year, you can make a little bit of money. It was never even that low. Even at IPO, it was still probably 100 billion. Okay, I guess that's how it is. IPR. A nice REIT. So DCF is good for REITs. Uh, 116, 3.3. It's a good yield, right? 6.5%. Commercial real estate is under a lot of pressure. There's some concerns, especially with vacancies. Vacancies are getting high, office space vacancies. So I'm at 138. So if you have a stock at a 16% discount, like, okay, here's a perfect example, because they're both, this is what I'm trying to say. So if this was the scenario, there was two stocks, Owens Corning and IIPR, and they're both at a 16% discount. IIPR is a better deal because you're getting a higher yield. I'm assuming that this DCF is accurate, like, and nothing's accurate, by the way. But assuming the DCF is a good valuation of these two stocks, then this is a much better deal. Like if you have a stock, one with a 20% discount and one was 20% overvalued, so premium. The premium stock may be better if it's giving you like a 7% yield, and say the discount stock is giving you nothing. So in this case, the premium stock would be a better deal. Even like I'm assuming that it is a 20% discount and it rebounds. Well, that's why I want to, like, I think doing this and being able to look back may give us more information to like kind of pinpoint these types of things. Need to wait for a fall in Uber to 58. Yeah, I don't know if it's ever gonna fall though. Like enough where it's a good value. It just seems like a waste. It's just way too overvalued. 16. No, no. ALGN, Align. Six, 9. It seems a little overvalued. RKLB. Wait, RKIB, right? I have that already. IEP. Okay, Pfizer. Yeah, I really like Pfizer. It seems like a really good value, but it's always so scary. Like, it's kind of like when Meta fell to below 100. Like, it sounds like, oh, that's a good deal, but at the time, it's hard to buy it. It's scary to pick it up because it seems like it's going to keep going down. Like Pfizer, like it just seems like a great deal, but why don't we all buy it? Obviously, we're not, because stock price is not going up much. $29,162. Yeah, they've just been getting killed, right, Pfizer? They just can't catch a break. PR, OGN, or Organon, the female, the it's like it's female medicine, right? Organon, OGN. Okay. Pfizer. It's not. It's definitely undervalued, but you think it'd be undervalued more, right? $40. So it's. I mean, it peaked at 59, so it's not like I'm not like valuing it at $200. So it seems reasonable. It could come back up to $40 range. But you would think if you buy Pfizer now, it's kind of like when Meta fell below 100. Could you imagine? You could have like quadrupled your money in like within 2 years. That would be amazing if you can do that. But if it only goes up 20%, it seems like it's a big risk for the reward. SG. Sweet green. Sweet green operates fast food restaurants serving healthy food at scale in the U.S. Well, it's up 156% in 1 year. I knew they would have negative free cash flow. So they're expected to have negative. So they're expected to have $940 million in 2026. So I'm assuming they're going to get positive in 3 years, positive free cash flow. So if I'm using the revenue, the projected revenue in 3 years, and I'm assuming they'll convert 20% of their revenue to free cash flow. So that's how I do it. Organon was spin off from Merck. Yeah, it's the female. They have like a female medicine, right? It's really focused for women. Organon here for her health. Yeah, it's a lot of like female products, like birth control, things like that. Yeah, I remember looking at the stock. I did a video on it. It looked pretty good. RKIB. RKLB. Rocket Lab. RKLB. Okay, at least they have positive at one point. Okay, yeah, it's tough to value a stock like that. It's less predictable. Because the reason valuation works so well with bonds is because bonds are called fixed income because it's pretty much fixed. If you receive principal and interest based off a schedule. The only time it's not fixed if it's variable rate, and then it's based off of like LIBOR or something, and who knows what LIBOR is going to be, but that's why stocks that pay dividends, it's a much more reliable way to, like, using a DCF or any type of valuation is more reliable for a dividend paying stock. It's also pretty reliable for a company that has consistent positive free cash flows. But if a company has inconsistent cash flows or negative cash flows, then it's a lot harder. You need predictability. But when a company has negative free cash flow, it tends to be more volatile a stock. And if you want a 10x a stock, you're more likely to do it on a volatile stock, not a stock not like a stock that's stable, that pays us dividend, that it usually doesn't go up much in price or down in price. It's pretty steady. IEP. The industrial icon. It's a limited partnership. So high dividends, 25% dividends. That's an anomaly. You're not going to get 25% historically. Maybe the last quarter they had I don't know how, but yeah, we did it on that dividend video. Remember that video where we went through the high dividend paying stocks to see how secure the dividend was? IEP. Yeah, I knew they weren't going to have. There's really no predictability with their cash flows. You can have it was like Zim shipping. You can have like 20 billion of free cash flow one quarter, and the next quarter you lose money. It's really volatile. Let's just pick the. It looks like 3 billion. They've done that before. Let's see. Okay, so I think it's unlikely. They have negatives in there. I wish I could get well, we could do it. Here's one way to do it. I mean, there's a million ways to do these things. Okay, so they averaged 1.1 billion. I think we have to raise the WACC because I think there's more risk in this than if you invested in Apple or something. Huh. IEP is garbage. Yeah, I think it is. Just because he makes a lot of money doesn't mean his company is going to make a lot of money. Because a lot of these people, they start companies, just to make money on their own, in their own way. So they make money on fees, or they make money from flipping stocks. Like if they own stock in the company. If you have a company, if you start a company and you own half of it and it goes in IPOs and now it's worth 10 billion. You can just sell your stock, sell 5 billion. You own half the company. You're still, the CEO, but you don't care if the company goes to shit. You got your payout already. It's the bag holders, the investors who are going to lose all their money. I think that's how a lot of these, SPACs do it. Like the people who start SPACs, they just do it so they could flip the shares. They have these worthless shares. It's like a shell company, a SPAC. And then they acquire a private company, an operating company. And then then when it IPOs, they sell their shares. And then a year later, the stock goes down 90% because the companies are garbage. So don't invest in SPACs. You're probably going to lose money. Yeah, I'll be right back. So who do you think is going to be the first company to 5 trillion? It's going to probably happen next year. Who's going to hit 5 trillion first? Will it be Nvidia, Meta, Amazon? Isn't there a way for me to... How do I do a poll? Isn't there a way for me to do a poll and... I can't... I thought there's a way for me to do a poll. I don't think it's going to be Nvidia. Yeah, I think Amazon is going to be the first company to... As much as I want Meta to be the first, I think Amazon has... I don't know, there's... With these companies like Apple, Microsoft, I think as great as they are, I think they're too much on the front lines. And Amazon it just seems like they're always the recipient of the money in some way through cloud and IP was trading around $50. Then reports came out saying overvalue. PZZA. PR. Oh, this is the Permian Basin? That's oil and gas? Is that a midstream? Permian Resources? What's E&P? Energy Exploration Production. So that's the upstream part of the oil and gas production process. The E&P companies are the first in line. If you can find a good E&P company, you can 5-10x your investment. With a midstream stock, it's kind of like a stable 10% a year, possibly more, because they pay big dividends. But with upstream companies, there's a lot of great risk, great reward. You could lose most of your investment if it doesn't. They're not able to extract as much oil as they thought. But if you're good at like due diligence, you could totally make a lot of money with an upstream company. Do you guys know what I'm talking about when I say that, upstream? If you don't, I'll explain it. I don't want to. I hate when I'm PR. The Permian Basin is a hot spot for oil. It's a lot of oil in the Permian Basin. And if you could always read like Wikipedia, if you have Simply Wall Street, it tells you about the company. Permian, focus on development of crude oil. Because once I saw Permian, I knew it was oil and gas. The company focuses on the Delaware Basin, a sub-basin of the Permian Basin. If you do oil, you'll probably have assets in Texas because there's just so much oil in Texas. West Texas, Eddy County, Lee County, and New Mexico. New Mexico also is a good amount of oil as well. I think Oregon, they've had I know if Canada has a lot of oil reserves. It's a bit too high, the whack. So I'm at 24. Seems like a good value. A good dividend, 5.75%. Meta, Amazon. Organon. OGN. Original Gangster. OGN. Oxy. Organon. They should have instead of male medicine or female medicine, they should have they medicine. So you get all the market share of the people in between. Yeah, it seems undervalued. Family medicines. No, not family medicines. They medicines. So just focus on the cross section. You know, there's a subset of people who say they're not male or female, right? I did very well investing EMPs, but you have to dive into filing. I don't really have time for that right now. GTLS, GitLabs. Oh, Papa John's, yeah. Look at that, 4.1%. Those pizza dividends. Lots of pizza dividends. That seems overvalued. 100 million. Okay. Canada's probably a better place to invest if you're looking for an EMP home run. Yeah, maybe. Well, there is a lot of oil in Canada. I'd rather buy DIN, which pays $2 dividend. Meta usually seems overvalued when I do the DCF. It's back up over 500. It felt like 450 last week. $556 is that sounds about right to me. I also got 550 when I did a meta video like a year ago. 550 when it was trading at like 400. Palantir. That's getting a lot of hype, Palantir. $177. Win. I did a video on Win recently, I think. Chart. Chart Industries. That seems high. 400, 600. That is right. I guess maybe the whack is a little too high. Low. So most are trading at a discount. A few are premium. The reason stocks usually trade at a discount is because the forecast. Sometimes the forecast is a little too aggressive, especially like 2-3 years out. WHR. Whirlpool. Wow. Is that right? It gets that high? Wow, it really seems undervalued, Worldpool. Why does it seem so undervalued? The stock must have came down a lot. Yeah, it was over 200. And then it just kept coming down. And I'm at 178. So it looks like it should be close to 200. Look at that dividend, 7.5%. if you buy the stock and it goes back to 200, you'll be killing it because they'll adjust their dividend, and so your yield will go up a lot. Because it's kind of like if you bought Coca-Cola stock in like 1980, and say they always pay a 2% dividend, you're getting a 1980 dividend, which will probably be like 80% today. BRK? Palantir. I did buy Palantir a while ago, and I sold it. Okay. Say Palantir. It's such a weird company. Like, nobody really understands what they do. A lot of revenue, a lot of growth in the future. So overvalued. I wonder why it's so overvalued. I mean, I'm at like $14. See, if it fell to 14, it would have been a good time to get around here when it fell to single digits. Okay, so they IPO'd it. So Palantir, they were not a SPAC, Palantir, but they invest in SPACs. I think I'm saying that right. They're not a SPAC, even though they started trading at about $10. So their highest price point was just a few months after they started trading. It got to 35. And then I remember it came way down. I think as low as 6. I mean, it's easy to now. It's like, oh, why didn't I put money into Palantir? But when it's that low, you just assume it's going to keep going lower. Or even if it doesn't go lower, it'll just trade sideways for like 5 years. I mean, this just came up pretty quickly. I mean, in a year and a half, it went from here to here, but I don't know. So, well, I'm at 14, a generous 14. Palantir. Yeah, I know that I'm sure there are lots of uses, but it's not as clear as other products. But I mean, they have grown a lot. Their revenue is up a lot. Free cash flow is up. So, yeah, I mean, I guess they're doing a good job. Win. Uh, 1.34. Win. Okay, so I'm at 96 for a win. Okay. So I guess it's a good start, right? We got 27 tickers. They're selling the government. Now selling to commercials. Yeah, I think like 3/4 of Palantir's business is to the U.S. government. So they're pretty heavy in U.S. government. And that's the best customer because they have the deepest pockets. Okay, yeah. So this was a good start, and I'll keep track of it every. Maybe each week we'll keep adding to it, and eventually it'll be a lot of rows. And I'm not sure what we'll do with it, but we'll figure something out. Okay, well, the casino opens tomorrow morning, so I'll see you on a casino floor. New earnings this week. Yeah, it did rebound. It was down with the market, but it rebounded. So, but hopefully they have good earnings. Maybe I'll do a video. Okay. Yep, I'll talk to you later. Thanks.